good afternoon. You're watching Closing Trades on 80 now. I'm Anisha Jain, with me Sasha Faridi, and for now the markets continue to take a bit of a slide. There was a couple of attempts made for a recovery, but that did not really work out well. The index is still below the mark of 21,600 for the Nifty, and the Bank Nifty too is languishing. Yes, it's performing better than the frontline index as far as the Bank Nifty is concerned, but overall there is weakness in the markets. It's broader markets which is outperforming a bit, so the mid cap and the small cap indices are marginally holding in the green, but clearly the frontline index is on the back foot, though the overall banking sector is attempting a recovery. Within the individual names, it's ITC, which is seeing a bit of a breakout today as well. At the end of the last session, we had seen there was a perk up in the last half an hour or so. Today seems to be mirroring the move. Airtel, L&T, Adani Ports are some of the other heavyweights which are actually putting their weight behind the Nifty. What's pulling it down, however, is Infosys, TCS. In fact, the entire IT pack is coming under quite a bit of pressure. That index is down around 1.5–2%. So the pressure continues on the IT index. And then HDFC Bank, every attempt it's making to break out is getting sold into. So today as well, that stock is down almost 1.5%, and Reliance also not batting for the bulls. So clearly, it's just that buying fatigue which is set in the markets, and doesn't seem like New Year has started on the best of the notes, because third day on the trot we have been in the red.
Yeah, and we've aligned ourselves with the global markets, although they have come off after that long New Year's break, and it's pretty much the first trading day all across. Markets like Japan, of course, are still on a trading off. But that said, Asia as well closed in the red, and that's how exactly the US market handover was also overnight. Even if you were to look at the pre-market rates, they're also indicating some more bit of softness ahead of the Fed minutes. But yeah, talk stock specific, and you've got the oil minister saying, they're not asking OMCs to cut retail prices, and that's surely added a bit of relief. BPCL is one key gainer in trade. There's L&T Finance as well. MK has upgraded it to a buy, up the target price as well to 190. So that's looking good, and a whole host of Q3 updates coming in. While it was a strong one from V2 Retail, you've got a 56% jump in their revenues. SSG as well higher by 47%. That was not quite the case with Avenue Supermarts, because that's indicating some amount of softness in their business. And slow store addition, the revenue growth of about 17% was definitely lower than what the street was anticipating. That stock has been clearly under pressure from the word go today. A couple of block deals as well, both on Samvardhana Motherson as well as PDS. These are stocks which are also in focus, Anisha.
Oh, well, yes, a lot of individual names which are buzzing around. So let's take the discussion forward with our technical experts as well as the fundamental guests joining us on the show. Daljit Singh Kohli, Naresh Mirani, as well as Kunal Bothra in the house. Naresh, let me begin by asking you about the market setup. Today, of course, Bank Nifty was going to be important in the sense of the weekly options expiry, which is at play, but that index is outperforming today.
So overall, what we are seeing is a lackluster move on the heavyweights. If you look at it, HDFC Bank is making a little bit of a dip. You have Reliance making a dip. On the banks, we are not seeing a follow-up price action on the positive side for the two heavyweights, ICICI and HDFC Bank. But if we look at the broader markets, we have come close to a new all-time high on the mid-cap index. The small-cap index is positive for the day, and the breadth is much better than what it looks like on the Nifty. So overall, looks like we are getting into a range-bound move for the Nifty and the Bank Nifty, but stock-specific action could be much better. Like in the banks, we've seen new 52-week highs for a Can Bank, but we've not seen a similar bump up in a SBI or the Bank Nifty as such.
Now, any trend that you're picking up in this market, aside of course, the flurry of trade and activity in the Adani names?
Yeah, so I think yesterday was a different day for the markets, because yesterday it was completely skewed towards selling of options. So call writers both on the Nifty and Bank Nifty were quite prominent in terms of the view they had on the indices. Today it's a bit mixed, because today, for example, you have option writers or call writers making a strong stance on the Nifty. But the stance has changed completely for the Bank Nifty, where you've actually seen put writing emerging at 47,600. So I think that generally is an indication that maybe we may not see more than 100 to 150 point odd correction on the Bank Nifty further from current levels, and that's where we may probably look at the first level of strong short-term support. But for the Nifty, I think 21,700 still remains to be a key hurdle or a resistance, and it's possible that we may take at least another couple of days to try and break past those levels of resistances on the indices.
Okay, point taken, but it's pharma that continues to gain ground. In fact, Biocon, for instance, is up over 6% as we speak. Gland Pharma, Pfizer, and even from the broader markets, names like Mankind Pharma, Marksans Pharma, they're all perking up. In fact, this is a space, Daljeet, that you track very closely. Which are the, companies that one should look at when one is looking at pharma, or a specific theme that you're watching out for here?
Yeah, good afternoon. Yeah, pharma, we have talked about in the last meeting also that we are very positive on this sector, and you can play it various subsegments. So one big theme which is right now playing is that problems on the US FDA side has reduced a lot. So if we see by the number of inspections that have happened in the past few months, especially in this last 11, 12 months, we've seen that the occurrences for voluntary action indicated or no action indicated are much more than the official action, which means that the companies have done a lot more work on compliances. So that issues, we've seen companies like Lupin, Ipca, where Dr. Reddy, where their plants were under FDA issues for last 7, 8 years, they have come out of those issues. So that is helping, because once a plant gets out of that FDA issue, then you start getting approvals, all the work, the time and effort that has already gone into filing those products, that starts coming to fruition. So that benefit is coming. Second is the pricing regime is stabilized there in US. So now we are not seeing too much of cutting down of prices, especially on the tablet side, so oral solid dosages. So that is also helping all these companies. And then we've seen a few new opportunities like Revlimid and Spirivia and all of those products coming in. So I think this US side business is doing well. Domestic formulation business for most of our companies, which are almost half is exports, half is India. And that domestic business is also on the right path, growing at 8 to 10% CAGR. So I think the times are good for this. There is one very important thing to understand now is that we are very bullish for not just now, but for next 2, 3 years on pharma, because I see that this is a scenario which is exactly similar to what happened between 2011 to 2015, when there was a big patent cliff. Similar thing is going to happen between 2023 to 2030, like something like $350 billion products are going to lose exclusivity. And out of that, almost 150 billion will be in biosimilars. And again, in India, many of the names that you took just now, many of our companies are involved in biosimilars. They have done a lot of work. In fact, one of the big company has the largest number of products in the pipeline. So there is a few very strong pipeline of products for next 3, 4 years, where all these companies will have a lot of visibility. I think pharma is in for a good time for next few years.
Clearly, pharmaceuticals and most of these names, Spark, Biocon, both are holding up very, very smartly. In fact, Biocon is clocking gains in excess of 6% as we speak right now. Naresh, any trading opportunities within pharma, you think?
So Syngene is what I like in terms of the risk reward right now. The stock has corrected from 850 odd levels all the way to 680, made a couple of bottoms around that area, still available around 720, 730 levels. So that's the risk reward buy in the pharma pack, which looks promising. Apart from that, Biocon could be a buy on dips. The stock has already moved up quite a bit, but it's a multi-month breakout. If you look at Biocon, the last high was around this 280 mark 3-4 times in the month of May to September, again back in 2022 also. So these two names look interesting, and on dips, the same Dr. Reddy's and Sun Pharma look the best.
Sure, point taken. So those are some of the trading strategies. Syngene is still something which looks attractive on the chart in the pharma sector. But overall, what doesn't look very impressive is the consumption basket. Daljit, we've got the initial numbers from the likes of Avenue Supermart and V-Mart, and even the channel checks from HUL, etc. And all are pointing to a subdued Q3 despite those festive cheers and whatnot. Do you expect this kind of weakness to continue both in terms of earnings as well as stock performance?
So we were expecting that this quarter numbers will not be so great, because one, that almost half of their business is from rural side, and there is no recovery in the rural side, which has now started doing some improvements slowly and steadily. Tier 4, Tier 3 towns, they have started showing some signs of improvement, but that will show up in the next quarter numbers. So it was expected that quarter 3 numbers, and managements have also guided on that they will see a muted growth. Second thing would be the benefit of any cool off in the commodity prices. Now that again, because of this inventory rationalization, that will take another quarter or so. I think now time is coming for consumption stocks, but we'll have to wait for another 1 or 2 quarters at least. Maybe next quarter we'll start seeing some green shoots. So we are, as of now, we are not invested anything in consumption stocks, but we are looking very keenly on this sector, looking for some opportunities. Maybe for next 3 months or 6 months, we'll get something there.
Kunal, you were quite gung-ho on the prospects of Avenue Supermarts. What happens now that, I guess the course of the stock has been challenged?
I think it should probably be a phase of a pause for the stock, and the stock has already seen a prolonged consolidation for the last 2 years. I think at 3,400 mark, which was the previous major swing low the stock had made in 2022. I think from there on, the stock has shown good recovery towards 4,000, 4,100, where it was trading till a few trading sessions back. I think this could probably just get into a let the stock get into a pause over here. It's still trading about the 200 and the 50-day moving averages, so that's a comfort for the stock over the near to medium term trend. Now 50-day moving average, for example, is at 3,900 for DMart, and the 200 DM is at 3,700 for the stock, which means that 3,900 should be a first level of support for the stock. If it corrects to those levels, could be a good contra buying opportunity from a short term play.
Okay, point taken. Let's just focus on Bajaj Auto as well, because that stock is seeing a spike as we speak. In fact, it's up 2.5%, and that's because the company might be considering a buyback, and that is expected to happen on Jan 8th. If I remember it right, earlier as well, there has been talk about that, but there was a bit of a flip-flop the last time they were going to come out with a buyback. But this time, at least on January 8th, is when we'll get the outcome of that. Stock seeing quite a bit of spike. Naresh, comment on the charts of Bajaj Auto?
So that's been the strongest name in the last few months. It's been a slow and steady rally. Has moved up from that 4,800 to 6,800 mark today. Very close to making new all-time highs again. So out here, the best way to trade is to keep a trailing stop loss and ride on to the move. Could see some more action given the buyback. Next move could be closer to 7,200.
The take coming in on Bajaj Auto. Kunal, but on the four-wheeler charts, what's the strongest one?
So it still looks like Tata Motors is the strongest one amongst the pack. Maruti apparently is an underperformer. I think, so two completely different poles for themselves. Where Tata Motors, I think, except for that breakout of that 800 mark and a slight correction from those levels, it's still looking quite strong. I would probably expect the stock to come back towards 850 to 880 mark, potentially in the next couple of months.
Okay, point taken. So those were some of the stocks from the auto sector which were bouncing around or in news. The other group which is in news is, of course, the Adani group of companies, transmission, gas. They're all flying away in the trading session, while the metals basket is coming under pressure. So Nalco, JSW Steel, even other names like SAIL, etc., they're all on the back foot. What's your take on metals right now, Daljit? Is it a bet worth taking at all? Because usually it's played against the cycle.
No, we are positive on that. In fact, we are holding almost 3 or 4 stocks in this segment in our portfolio. Basically taking a call on various sub-segments. But yes, we are positive. Two things, because one, that in an election year, normally you'll see an impetus on the infrastructure, which is a clear growth driver for this sector. Second, more important, is the global factors, macroeconomic factors, and in a benign interest rate scenario or expectation of a benign rate interest scenario, dollar index going down, it is always positive for metal companies. So we are quite positive. We have almost 10% allocated to this sector.
Rajit, is it a given? Stay away from IT services?
IT services, we have 1 or 2 small companies in our portfolio, not purely because of the top-down approach, but purely it's a bottoms-up approach. The company itself is a good company doing something niche, some niche activity. That is why we have taken that, and not taken as a call on the IT sector as per se, but it's just that it is a part of that IT-enabled services company. So the view is that IT is also coming probably towards the end of the bottoming time. Now, This quarter number again, it's exactly the same what we talked about consumption story. This quarter numbers will not be good. We know that third quarter is always the leanest quarter for IT. And secondly, the management commentaries have not been good. In fact, we have heard some deal cancellations, etc. So this quarter numbers will not be good, but we are expecting that probably this time the commentary will be much more smoother, much more soothing than what in the previous quarters was. Why it will be? Because one, that they have already seen the worst, and if the interest rate scenario is changing and all these issues about US hard lending and soft lending and all that going away, then I think things will start normalizing. And in the meantime, the stock valuations, especially the tier one companies in IT, the valuations have become quite attractive. So I think it will come, but probably 1 or 2 quarters we'll have to wait.
Okay, point taken. Just wanted to highlight Paytm as well because that was also just coming up on the radar in terms of a move that we saw on an intraday basis. So yes, that stock too is holding up. In fact, on that note, let's do one thing. Let's slip into a very short break. When we come back, we'll discuss more what's happening in the markets because for now, it's a couple of those big buzzers, Biocon, Bajaj Auto, etc. We'll track more stocks when we come back.
Back with closing trades, right here in 18 hours, struggling a little bit, but no deep damage, 0.5% lower, pretty much at par for the course, and in line with what the rest of the globe as well is doing. The sectors under pressure clearly are metals and technology. They are the ones which are at the bottom of the pack, and some of the heavies like an HDFC Bank also down about 1.5%. Reliance is languishing. And that's pretty much with the case with the Bajaj Finance, UPL, not quite in terms of weightage, but it's a drag of about 1% or so. Hero MotoCorp is also down. Tata Steel as well is down as we speak right now. But lots of gainers too. Look at what's happening with the Bandhan Bank, a Canara Bank. They're both perking up very smartly. Bandhan Bank pretty much at the high point of the day, about a 6.5% dash on that stock on the futures. Can Bank is higher by about almost 4% as well. And Daljit, that's the other point in the market right now. The bet on PSU banks and the smaller ones, ex-SBI, because they haven't quite participated in the move, which was very restricted to a few banks all through last year. So they do have scope of higher alpha this year, perhaps. Would you concur with that view?
We are not changing our style to that or going down to that path, mainly because we want to stick to the high quality and better ones among them. And incidentally, we already hold the bigger names in the PSU bank. So we don't have to really go down that line. But I think it's for those people who have missed the bus in the frontliners or the larger names. So now and those have already moved a lot. So now they're looking for the next one to go. So that's why you start going down the curve and see which one has not moved or relatively which has moved lesser and look for those kind of stocks. I think it's better to be with the better quality companies. It doesn't matter if you have lost that opportunity, don't worry, you will get some opportunity in some other sector. You don't have to be in the financials only. So we have very strictly controlled ourselves on that part only, that we'll stick to the first 2-3 names only in the PSU banks. We have some NBFCs. In fact, as a BFSI as a whole is the largest in our portfolio. And we have some 2-3 NBFCs there and a couple of these PSU banks.
Okay, talking about PSU banks, that's something we discussed with Sridhar Sivaram of Enam Capital as well. Listen to what he had to tell us.
We remain quite bullish on PSUs, in fact, especially the banks. So we did a quick number crunching to figure out what has happened. These stocks have gone up so much. How have the earnings grown? Surprisingly, the earnings in the last 3 years have outpaced the stock returns. So actually, they've got derated.
Earnings have outpaced the stock return.
Yeah.
Okay.
So actually, they've got derated because the stocks haven't kept pace with the earnings. And if I look at the earnings outlook from here on, also, I think they will do north of, say, 30%. Within the PSUs in general, there are various pockets.
Yeah.
Okay, so some pockets like defense and all have become very expensive. There are other pockets like, say, the oil marketing companies, if you take, they look extremely cheap, but they are cheap for a reason.
Yeah.
So if you want to, fast forward and assume that some of these will change, then they are interesting bets. So there are various pockets which have different valuations. We remain bullish on the entire pack selectively. Banks surely, and others selectively where we think that earnings look good, opportunity is decent, and valuation comfort is far better than other pockets.
Okay, so that's a verdict coming in on PSU banks, but one can't take away their eyes from the kind of move that we are seeing on Bajaj Auto. That one is just not stopping. In fact, the last buyback that the company had done was just last year and was around 2,500 odd crores. And look at that stock move today. Not sure what kind of excitement is really building up, but we'll get to know the outcome on Jan 8th. But I think you track this stock very closely as well, right? Kunal, what's your take on the next level that one should watch out for?
Well, difficult to now spot a level because the stock seems to have even stretched beyond the overbought territories on the charts. So at 6,500, 6,700, it looked like that the stock was overbought. In fact, in the last 3 days, it went into a 200, 250 point correction from 6,800 levels to 6,500, 6,550 mark where the stock had tested. But today seems to be yet another day of a breakout. The volumes have participated late, of course, because of the late movement of the stock price, but we'll see till what extent the volumes shoot up higher for the stock price. If it manages to surpass the previous say 2-3 strong average in terms of volumes, then we can probably call it as a breakout move, and 6,500 could remain as a support for a fresh trade on the upside.
Actually pull up Bajaj Holdings as well, because that company is also moving. So that's the kind of trade that we are seeing in the market right now, that even Bajaj Holdings is being traded in the anticipation of the move that we have seen on Bajaj Auto. Separately, in terms of the gainers today, it is Spark, as we pointed out earlier. NBCC is one stock which is up around 9%. Sobha 2 is holding up comfortably. And then, of course, on the losing side, some of the names like Keynes, 3M India, BHEL, JSW Steel, these are the names that are coming up on the screen. But L&T Finance Holdings has actually managed to hold up quite well for itself. There was a note that came from MK as well this morning, wherein they have, double upgraded the stock from a reduce all the way to a buy, and the target price now stands at close to 190, which is just $30 away from the current market price. I have my colleague Gaurav joining us to talk to us about what exactly were the details of the note and what makes MK that positive on the stock. Gaurav, tell us.
MK upgraded the L&T Finance from reduce to buy, and they have also hiked the target price to 190 rupees from the previous target price of 155 rupees. Now what they believe is that the L&T Finance has seen like some kind of choppy past. They have some kind of stable present right now, and the future is going to be brighter for the company according to MK Capital. They believe that the margins are going to be strong from here on. They have strong provisions also, and that is going to drive the ROA above 3% according to MK Capital. They also believe that the Laksh 2026, which is the initiative by L&T Housing Finance, and where the company is addressing and entering into adjacencies like cards, micro LAPs and gold loans. This is going to boost their profitability, and MK is very confident that L&T Finance will able to achieve all the targets that they have given for FY26 even before FY26, and that is why we have seen this kind of upgrade coming up. Now let's talk about the stock. The stock has already moved almost by 3% today, and if we also look at the stock performance, it has been up almost by 10% in the last 5 trading sessions. So it is really interesting to see how the stock is going on and how it will give returns to the investors from here on.
Thanks for highlighting all the details on L&T Finance. Stock clearly a gainer in trade today. Daljit, good to have you on the show. We'll let you go on that note. We'll take a very quick break. When we come back, the last half an hour of trade this afternoon. Still a little soft and pretty much around the session lows. We're at that 21,500 thereabout mark for the Sensex. For the Nifty, I beg your pardon. And similar is the picture for the Sensex as well. Nifty Bank under pressure, metals and IT, they are the spaces which are weighing heavy on the markets this afternoon. Well, let's welcome on board Dipan Mehta as well and find out what he's planning for 2024. Dipan, hi, afternoon. Firstly, wishing you a very happy and prosperous new year from all of us.
Yeah, hi, good afternoon, and thank you for having me on your show. And Happy New Year to you and the entire team at ET Now.
Thanks. Dipan, what's the strategy for this month? The seasonality says go easy. Would you say be a little cautious, try and protect profits?
I'll go with the latter. We need to be a little cautious. and protect your profits. Generally leap years are not that great if you go back into memory, right? From 92, Harshad Mehta scam to 2000 dot-com bubble, 2008, the global financial crisis, 2020 was, of course, COVID-19. So I'm a bit superstitious about leap years. So I just want to play on the safer side and not make any aggressive moves, reduce leverage positions, improve the quality of the portfolio.
Interesting, but we have been discussing those graphs, how every 4 year there's a top that's made, and usually the top of the market happens in the first quarter of the calendar year, and we are sitting right there. But let's see in terms of the other sectors and markets as well, what else is happening. ITC, that's showing a big breakout. What do you make of that, Naresh?
ITC looks interesting because it's gone through a pretty sideways period of last almost 6 months, and today it's seen a breakout. Yesterday also was a breakout. I would expect a retest of that mark of 500, which is where it topped out on the news. So overall, at current levels, the risk reward may not be great, but it's a hold at current levels. So I expect a move towards 500 in the short term.
Coming in on ITC right now, and Dipan, ITC brings me to the rural plays, or rather, low ticket retail plays, and the kind of Q3 updates that you're seeing from there, be it for a V-Mart or for that matter from a D-Mart. And the slowdown is quite evident, and the K-shaped recovery only becomes stronger, wherein the urban, more exuberant spends are the ones which are seeing an uptick, whereas the lower end of the curve is only getting dragged lower. Do you think that's a contra call right now one could bet on, or would you say avoid?
So generally, we have not been very positive on ITC, and certainly that call has got us wrong, because ITC has done pretty well over the last few months, last 2-3 years as well. The price to earnings multiple certainly has expanded, and management is more open and transparent with communication. And then there's this demerger of ITC hotels also, which is a value unlocking opportunity, at least marginally. But end of the day, it's a tobacco company, and volume growth is low single digit. They have been trying to get away from tobacco for the last 30 years or so, but have not been able to do so successfully. Tobacco still remains a large portion, cigarettes and tobacco still remains a large portion of their net profit margins and of their net profit. And whatever they've achieved in terms of FMCG, you compare that to what other FMCG companies have done in the past 10-15 years, it is quite disappointing in terms of return ratios or operating profit margins. So for us, ITC is still an avoid. Maybe we are prejudiced against it being a cigarette company per se, but there could be trading rallies and stock can certainly move up higher because P multiples are low compared to other consumer-oriented businesses.
Taken, but just coming back to Bajaj Auto, because that stock is soaring away up around 6%. Let's go across to Shrishti to get a sense as to what could be the numbers in terms of the buyback. What's the buyback math looking like, Shrishti?
Well, yes, a big announcement coming in from Bajaj Auto, wherein 8th of January is the board meeting where the company will discuss on the proposal of a buyback yet again, because just 1.5 years back, we have seen Bajaj Auto coming out with its first ever buyback, which was back in June 2022. And that buyback was of around 2,500 crores. And the company has been rewarding their shareholders through dividend, but that was back in 2022, where then for the first time ever, the company has announced the buyback, and this is the second time that the company is coming out with a buyback proposal. On 8th of January, we will have our eyes on, but the company last time has done a buyback of around 2,500 crores. Then too, they had quite a healthy cash on the books, and this time their balance sheet as well is quite very strong. But along with that, this time we are seeing that the industry is turning around. Some of their new launches are doing pretty well. So let's see, and that will be interesting to note if this buyback will be of a higher amount of that 2,500 crores, which the company has done earlier. In terms of the cash on books, then the company has a surplus fund of around 17,326 crores as of 30th September, and that was after a dividend distribution of around 4,000 crores during the quarter, because company has been rewarding their shareholders. Like I mentioned, quite a healthy dividend yield, and every year it gives around 120 to 140 rupees per share onto their dividend terms. So all eyes will be on Bajaj Auto, but definitely on the back of this buyback announcement, we are seeing no stopping on the stock of Bajaj Auto. Back to you. Yeah, clearly 4.5% higher right now. It touched that 7,000 mark as well for the first time ever. That's Bajaj Auto in trade for you. But Dipan, what are your preferred bets within the two-wheelers?
I think Bajaj Auto has done really well, and the monthly numbers were quite impressive. And I think gradually with the global economy settling down, exports should pick up certainly for Bajaj Auto. Valuation-wise, also pretty reasonable. So from that point of view, I think one should remain invested in Bajaj Auto. But specifically, from point of view of the best two-wheeler company, in our opinion, should still be Eicher Motors. And we are a bit disappointed with their monthly numbers for the two-wheeler sales. It was well below our expectations, but that could be a minor aberration. But in the medium to long term, we do feel that Eicher Motors will be able to gain ground and grow on a consistent basis, purely on account of its product profile, expansion of its distribution network, and there's a huge export opportunity which I think is not being pursued adequately, or it's not given results so far in terms of strategy.
I also wanted to discuss the entire power, oil and gas space with you. But before that, Dipan, let's listen into the bites coming in from both the oil minister as well as the coal secretary, because the oil minister was talking about how there's going to be no cut in the retail fuel prices, or at least for now there's no discussion on the table. And the coal secretary also talked about how they are going to become completely independent in terms of coal right now, and the coal import dependency is something which is expected to go away. Listen in to the view coming in from the oil minister as well as the coal secretary.
We had a target of 10% blending by November 2022, 23 or 22? 22. We did that 5 months in advance. Then we had a target of 20% blending by 2030. We brought that target forward to 2025. आप पीछे आपने कई कहानियां सुनी, आपने कुछ कहानियों को एग्जैजरेट भी किया कि यहाँ से फीड सप्लाई बंद हो गई, वहाँ से वो हो गया, सारा प्रोग्राम इज गोइंग टू बिकम वल्नरेबल. लेट मी टेल यू, yes, when you do a large scale transitioning like this and you're using diverse feeds, there are challenges, but we've not only met all those challenges, we met our 12% blending target, which was October 23, and we are well on our way to achieving the 20% target by end of 2025 instead of 2023. No discussion with the oil marketing companies on any such issue. And please, we are in a highly turbulent situation.
Coal India is doing extremely well. You must have seen the market capitalization growth in last about a year plus. It has gone up by about 40%. As regards the production volume is concerned, Coal India is consistently showing excellent growth of over 11% compared to the last year. And as far as the capex is concerned, Coal India has achieved 84% of its target by December. Primarily, Coal India is investing onto the first mile connectivity projects for eco-friendly mechanized evacuation of coal from the mines to the loading point. Massive investment is going on environmental sustainability measures, which includes closure of the mines and lot of afforestation, creation of water bodies, eco parks, OB2 sand, etc. Various projects are under implementation. Coal India also have plans to construct the spur lines as and when required. CIL has committed about 20,000 crore plus of investment onto augmentation of railway infrastructure in association with the state governments and Ministry of Railway in all three major coal producing state of Chhattisgarh, Odisha and Jharkhand.
Well, a slew of stocks in focus as well, given that we are seeing a bunch of Q3 updates to trickle in. Let me take it across to Ashesha for a quick summary. Ashesha?
Well, yes, first up, let's talk about V2 Retail. The stock clocked an upper circuit of 5%, very strong operational data. 56% revenue growth is what the company has reported on a year-on-year basis. SSSG growth, meanwhile, has also come in at a solid 47%. The stock is locked an upper circuit. Remember, the stock has risen over 50% in the last 6 months odd. The stock today on the back of operational data is in focus. Bank of Maharashtra, meanwhile, is also up nearly 4%. Deposits are up 18%. Advances have seen a solid uptick of about 20%. CASA ratio, meanwhile, stood at 50% versus 52.5% that the company reported same time last year. CSB Bank, meanwhile, is under pressure today, down nearly 2.5%. Deposits are up 21%. Gross advances are up 23%. Perhaps weaker than what the street was working with, and the stock is reacting negatively in trade today. Punjab National Bank, meanwhile, is trading flat. Domestic deposits have risen by nearly 9% on a year-on-year basis, and advances are up nearly 14% on a year-on-year basis. Let's also talk about high-tech pipes. The stock is up nearly 1.5% after it reported 8% volume growth on a year-on-year basis. Share of value-added products has also risen, and they did talk about their expansion plans that they've commissioned a new plant in Gujarat. The stock is up nearly 1.5%. Lastly, let's talk about Vedanta on the back of operational data yet again, where mined metal production is up 7% on a year-on-year basis and about 8% on a sequential basis. Refined metal production, meanwhile, on a sequential basis is also up nearly 7%.
Point taken. In fact, we spoke with the management of High-Tech Pipes, and they wanted to target a revenue profile of 5,000 crore with an EBITDA of almost 250-450 crores. So that's one stock to really watch out for. But Dipan, within the entire updates that we have got right from the financial names like Fed Bank, M&M Financials, and the slew of updates that my colleague talked about, what really stood out to you?
No, I didn't get the question. What are the updates that we are talking about?
The Q3 provisional updates that have come in from a lot of companies, right from Avenue to V2 Retail to VMart, and also the banking numbers that have come in from Bank of Maharashtra. You had M&M Financials come out with their provisional number. Ditto can be said for Federal Bank as well.
No, see, I've not looked at those numbers that closely. Nothing which is really eye-popping in terms of us to change our view on any of these companies, and rather wait for the quarterly numbers. The earnings season is around the corner. But by and large, from whatever I have seen, the banking companies are done pretty okay. But rest of all the indicators, momentum indicators, are not all that great. And if you really ask me, the biggest risk factor for this bull market is a slight pause in the earnings growth. And that can happen at any point of time because of base effect or mild recessionary or slightly depressed demand in certain parts of the country. And I think the early indicators will certainly show that. For example, the volume figures which came from Maruti were not all that great. Even the GST number was okay. I think 10% growth is amongst the lower side. So we just need to keep an eye out for such high momentum indicators. If they're turning slightly soft, and that certainly is a risk factor.
Point. Okay, that's pretty much an update of the Q3 updates that have come in and what has been ahead of estimates, what's been in line and what's been a weak set. Clearly, VMart and DMart both have been weaker than what the market was anticipating. But let me take it across to Sharad as well and get in a sense of what the dealing room chatter is this afternoon and what are the stocks which are being talked about. Sharad?
Well, the cover on the D Street is focus is Aarti Industries, and sources to ET Now say that Aarti Industries is in talks with UPL for a new long-term contract which is coming in for the intermediates. Now this would be coming in for the agrochemicals phase. Now already the company is having an existing business contract with UPL, and this would be a newer and a bigger one. Now it's expected that the new contract will be likely a multi-year large contract also, and recently also a large contract was announced with a global agrochemical player as well. Also no replies come in from the queries sent to UPL, but Aarti Industries stated in an email reply to the ET Now that UPL has been a customer for several years and the company regularly engages in supply of various products coming over these years. So Aarti Industries would be in focus as it is in talks with UPL for a large long-term new contract.
Interesting there. Thanks, Arshad, for joining us with that. But within this entire space, agrochemicals, specialty chemicals, it seemed to be coming back. And we were just speaking with an analyst earlier in the day who believes that we are very close to the bottom of the cycle. So if one is looking at a medium-term play, is chemicals a good bet?
Yeah, see, these are cyclical industries, and certainly they can come back in the reckoning if prices were to move up, demand improves. But valuation-wise, I think they are quite richly valued, given that essentially they are B2B businesses, as also the fact that they've had last 3-4 quarters to be extremely soft. Also, large capacities are going on stream for virtually every specialty chemical manufacturer, and how that actually the capacity utilization and the returns over there shape up need to be tracked. So from that point of view, when I look at the risk return profile, I'm not that comfortable buying any specialty chemicals. One exception, of course, is PI Industries, which had a correction because one of their largest customer was going to face increased competition from Chinese, but that we more into the future. But certainly that stock is something which has really outperformed over the last decade or so. And we'd like to remain invested in that as a measure of disclosure. But by and large, the sector as a whole, I'm not that positive, purely on account of the valuations. Although they may be declaring good numbers 2-3 quarters down the line, and you could see a trading rally in them.
Okay, that's the take coming in on what to make of the move in the chemical space and how to treat them. But just looking at some of the closing rates as well, while Bandhan Bank, Bajaj Auto clearly are your big high flyers today, there's a move in the pharma pack too. Look at a Biocon today. We were just highlighting what Spark as well has done. Dipan, anything within pharma you think is a good bet? Something that one can buy at these levels?
No, not really, but it is on our radar. And with disclosure that we may invest, Mankind Pharma is an interesting company that we have on our radar. And if there's a deep correction in mid-cap stock, there is certainly one company we are going to assess more deeply and look at buying into it. We like companies which are more domestic focused, and Mankind Pharma is totally domestic focused and a very aggressive player as well. Other than that, I think one should remain overweight in pharma, and the likes of Cipla, Dr. Reddy's, Lupin, I think all of them should do well over the next 3-4 quarters. Certainly, the competitive intensity and price erosion in US generics market has subsided a little bit. So from that point of view, I think earnings for next few quarters may be pretty decent.
Pharma, that's a stock which is on the watch list, so keep it on your radars as well. But Electronic Smart India, that's seen a sudden spike. It's 11% higher as we speak. Let's pull up the intraday chart as to whether the volumes are also high on that one. 225 on Electronic Smart India. You also have a couple of these real estate names, Sobha as well as Prestige Estate, which are seeing quite a bit of spike. In fact, Naresh, it looks like for the real estate pack, every dip is getting bought into.
So one by one, names have done well. It started off with DLF, then further names. Now even Sobha, which was say a relative underperformer, lots of say concerns were there a few months back. The stock has again made a new all-time high. So structurally, it is clear that the trend is strong across the real estate pack. But the fact is, majority of these names have gone up 100% plus in the last 6 months. So at these levels, one should actually be looking
for many years. And if the if the India government comes back to power in May, then you will see a continuation of the PSU rally, especially railway stocks, considering that there's a huge modernization, upgradation, and expansion program. And all these companies are sitting on massive order book position. So there's good earnings visibility. But overall view on the market is slightly negative. I don't want to buy into any mid caps at this point of time. So railway stocks are certainly on the radar, as I said, about some of the pharma companies. But I want a 20-30% correction in these stocks before I can find that there's some margin of safety. And these companies then turn out to be great outperformers.
So that's on the railway stocks. Time to take the BTSC ideas from our chartist. Kunal, what's on your radar?
So I'll go with the real estate stock as a buy. Godrej Properties, the stock breaking out of 2030-40 mark today. So it's a buy with 2100 as a target and stop loss at 2020. And Manappuram Finance is also inching towards a breakout of a consolidation. So buy with a target of 185, stop loss at 169.
Naresh, what's the idea that's popping up on your screen? Is it a BTST or STBT given the weakness in the market?
So both BTST, the breadth is much better than the Nifty. First is a buy on Crompton Consumer. The stock has bottomed out and showing a lot of momentum in the last two sessions. Could break out. Stop loss at 316, target price of 330. Second is about Muthoot Finance, which is making a flag formation, which would break out above the 1490 mark. Stop loss is at 1465, target price of 1520.
Pull up the twin lines of Nifty as well as Bank Nifty. Those two indices have performed very differently today. You have the Nifty, which is down a good 150 points. It's threatening to break below the mark of 21,500 at the index level. If you can pull up the intraday charts of Nifty as well as Nifty Bank, and Nifty Bank is almost in the green. If I have the numbers right on my screen, it's down only 5 to 7 points, while the Nifty has been actually inching higher. So in the last few minutes, that divergence has actually expanded, and Nifty is now threatening to go below 21,500. Quickly on the charts, Kunal, is there a trade to make here?
So on the Nifty and the Bank Nifty, I would believe Bank Nifty could be something to actually go long or to carry forward a long position from here on because of the outperformance the index has shown today, and more importantly with 47,600 mark, put options being a good hub for option writers. So if we expect or if we see tomorrow morning, if the Bank Nifty holds on to that 41,600 mark, that could be a very good risk reward to go long. Maybe keep a 150 max 200 point stop loss into a trade and record for a bounce of at least 300 to 400 points.
Okay, that's the take coming in on Nifty as well as the Nifty Bank right now. But Dipan, does it seem like there could be an impending correction in the way for small and mid caps, or do you think it will largely be consolidation because there's still a lot of that FDI, FII money waiting on the sidelines?
See, the FII money is going to go into large cap stocks. So tactically, you should be overweight large cap and underweight small mid cap stocks. But the real problem is that we are sitting on a lot of profits for small mid cap companies. Those investments have generated massive returns. They are trading at rich valuations. Some of them are outstanding businesses as well. It's just that they are well overpriced at this point of time. So the real question is, just because a stock is overpriced, will you just sell it, although you know that the underlying fundamentals remain strong and could surprise you 6 months, 12 months down the line? That's a difficult question to answer. All that we can say just now is that it's best not to put fresh money in small mid-cap stocks. Incremental flows have to go into large cap stocks and try and increase the weightage of large cap stocks within the portfolio. And overall, I think if you hardly have any cash in your portfolio, then this is a good time to start building some amount of cash, at least by not investing your savings, or then trimming the positions across the board, getting out of poor quality businesses, and just waiting and watching, because there's going to be a correction. All bull markets have a correction. And who knows, in 2024, we may test the 200-day moving average, which hasn't been tested for many months. So from that point of view, I'm a bit cautious. I'm not negative on the market over the medium to long term. This bull market will last for many, many years, notwithstanding how 2024 turns out. But given the gains we are sitting on and given the valuations, I just want to be a bit careful and not over leverage or overextend myself.
That's the take coming in on the market right now. Well, be on the side of caution. If you are looking at raising some cash, then right now is the opportunity. Dipan, good to have you in the show as always. We'll let you go on that note. But Kunal, do you also see that mid and small caps is where people have made the money, and that's where you need to sort of now go conservative?
So I think, I think it could be a good strategy to go conservative on mid caps, small caps. The best way to do is book out some profits, look at the stock specific performance, whether these stocks retrace, fall, if the index goes into a shallow or even a mild drift on the downside. I think that's what we tend to look out for, because when stocks participate on the upside, even if the indices are actually going into a bit of a drift or a downward correction, that's generally an indication of strength for those stocks, even if they are mid caps and small caps, and if they've done reasonably well for themselves over the last 3 months or over the last couple of years. So we tend to look out for those relative strength on those mid caps and small caps. Of course, you will not have all basket of stocks which will do pretty well for themselves. So you'll have to probably try and filter out those set of stocks which could probably be outperformers or outliers as compared to the other peers.
Talking about outperformance today, ICICI Bank and Axis Bank are outperforming the index, and of course the HDFC Bank stock, which is actually down about 1.5%. So again, there's a bit of a churn wherein Axis Bank is ending close to the highest point of the trading session, while HDFC Bank is ending at the lowest point of the trading session. So that's the kind of dichotomy that we are seeing in the market at this point of time. What are the other heavyweights that dragged the market today? It was Reliance, which was down almost 1.25%. So there was a slide of almost 27 points that was on account of Reliance alone, and then Infosys as well. In fact, the rest of the IT pack, right from a TCS to a Emphasis to the other names as well, like LTI, Mindtree, Wipro, they were all down in the trading session, and that's the reason Nifty IT index has ended with a cut of almost 2.5%. Metals were the other drag, so Hindalco, JSW Steel, Tata Steel were the other names. Of course, overnight we had seen the dollar had spiked a bit, so part of the move is on account of that. What held out was again the PSU banking space. So Bank of Maharashtra is higher by 4%. There's also that news flow that they've cut the rates of home loans. I think perhaps one of the first banks to do that in this cycle. So Bank of Maharashtra is in focus. And of course, the Q3 update suggested that the deposits and advances had grown, shown a jump of almost 17 to 19%. Real estate pack also bounced back. So a Sobha, a Prestige, a Phoenix Limited. These were some of the names that were there. And then Pharma. Biocon, 6% higher on that one. Gland Pharma up 3%. And of course, one can't forget Bajaj Auto and that big spike that we saw in the last 30-40 minutes of the trading session. That excitement of the buyback building in January 8th is the day of the board meeting. But for now as well, the market was fairly excited about that. The advance decline ratio also churned a bit because at the start of the day, it was much more healthier towards the advances. But nonetheless, at least the mid-cap and the small-cap indices go home in the green, while the frontline index down about 140 points. That's all we have on this edition of the show. It's curtains down on closing trades. Thanks so much for being with us.